This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. And today what I want to discuss is we're in a bear market, no doubt. And it's possible that we're trying to turn right now. And what I wanted to make sure you understood is that I believe that what you want to do is start wealth building strategies right now in the middle of a bear market. That's right. And my reasoning is that the best stocks will have broken out and have been gone by the time the market makes a bottom. Now we're at a pretty critical point, as I talk about on my Friday review of the S&P, meaning we could be running into some pretty significant resistance in the overall market. And so the question is that do I really want to put on a wealth building strategy doing a monthly and a weekly time frames together to try and get in something that's going to go up for a while? And the way I would recommend doing this is I've got two different things that the way I would focus in on it. Number one is you have to have good money management skills and trade management skills. But in this case, I'm talking more about money management, meaning how much you risk per trade. And I'm going to give you another piece of the puzzle when you're in this environment that I think can make you a little bit more comfortable in putting on something like this. A setup like this. So let's go ahead and get into this. I want to use a couple different examples. In fact, I want to start with something like harmonic light. And what I want to show here is if we look at what the S&P has done, let's look at the S&P and notice how this has made lower highs and lower lows. It's below a declining 18-month. It made a new low here and it's made a lower high. Now it is looking like it's making a higher low and potentially making a higher high. Is it going to get through the 18-month on this move to the upside? I mean, none of us know that. And anyone who thinks they can tell you that they know what's going to happen, you need to run as far and as fast away from something like that as you can, because they might be right for a little while, but they're basically they're guessing. All right, they're coming across as if they know everything and they know exactly what's going on, like they know more than you do. But I'm telling you, if you followed what I do and if you've taken my course, there's not a lot of guys out there that are gonna surprise you with their knowledge. Okay, I want you to understand that if you go through and look at the types of things that I'm showing, it overlays some fundamentals in your individual picks for sure. But if you're doing this type of work and looking at it in multiple time frames and you're taking momentum into account and trend action and the individual candlesticks, there's not much that's going to be thrown your way that you're going to be surprised by. All right, but the problem we've got is that we're dealing with an environment where the market, could force something down. If the market goes down, we know 3 out of 4 stocks are going to go down with it. So how do we invest in this? And what I notice is I talk to a lot of guys and especially guys that like to trade, they're very hesitant and a little scared, frankly, of putting on a longer term trade. And I actually went through this process because I did so much trading earlier on. I was getting in and out all the time. And for me to transition to the longer term time frames, I understand where you guys are coming from because I went through it myself. But here, I want to give you a strategy that should allow you the ability to give this a try without risking that much in your account, and then you can build up over time. So here's how I'd go about doing it. So I'm going to give you an example of this stock. Huge breakout on the monthly with massive ADX reading, confirming MACD. We get this pullback and it consolidates in here, and we see this ABC decline. We go into the zone and then we come back out, and then coming back up in here. Now, you might not have taken this trade here. You might actually have waited for the weekly to set up like this, and that's where the daily consolidated into a zero line reversal with low ADX. And then as this kind of emerged out of here, you would have been getting long, somewhere in here. Now, I mean, if you got long here, great, but there's nothing wrong with getting in this big, huge momentum condition on the monthly out of this massive breakout. Remember, this is the first pullback after a huge breakout. And the reason why I'm bringing this up is you could have either done the breakout pattern or you could have done the higher low, the first pullback. All right. Both of these are wealth building strategies because the monthly is the trade time frame and the weekly is the trigger time frame. So we get this set up here and you get long and you give it the proper amount of room. You would have taken one target, you would have taken a quarter off or a third, depending on your strategy. You would have ended up going to a break even on your entry. Okay. And you'd be sitting back and waiting. And what the market is doing is just not relevant. So this stock has been going up. I mean, this stock you would have bought somewhere around, let's call it $12. It's up around 15 and a quarter, 15 and a half. You've taken partial profits. You're at a break even on the balance. So if the market goes flushing down the toilet, you're actually going to make money in this trade. It's not like you're going to lose money in it. Now, what I would recommend is to just do one of these. So look for a monthly, weekly that really looks attractive to you. You put the trade on. You give it the proper amount of risk. You give it the weekly charts. You have to give enough room to breathe so that any little market movement doesn't shake you out. So once you've done that, you put this trade on. Once you can get a target, and what I do is what I tell my subscribers is if you enter here and you figure out what you're risking in the trade. All right, I do provide this in the course. I tell you exactly how I'd go about doing that. But if you put it on here and you give it the proper amount of risk, once you hit that, so if I'm risking, in this case, let's say I'm risking $2. Once I'm up $2, I want to take a quarter off, okay? And depending on your strategy, you might go to a break even, or what you might do is cut the risk down to $1. So instead of risking $2 on the balance, so let's say I bought 1,000 shares and I took 250 shares of profit at a $2 gain. Okay, and then on the 750 shares that are left, instead of risking $2 on the balance, I risk $1. Now, if it keeps going and you hit 2 to 1. So if you're up $4 in the trade, then you definitely want to go to a break even at that point. All right. So you would be most likely you'd be at a break even on this trade or pretty close to that. And so you're in this trade. Once you hit that 1 to 1, okay, meaning you're up $2 after risking $2. Now you've taken a profit. Now this trade is basically at a break even. All right, we've got a break-even trade in place because, like I said, if this just goes down and gets hit, overall, you're basically going to break even overall. Even if you lose $1 on the 750, you've made $2 on a quarter. Overall, you're going to break even. I mean, it's going to be close. It might be a little loss, but it's not much. You're not risking a whole lot. You're certainly not risking what you started out risking. So once you reach that point in one stock, then you can go buy another one. Okay. Now, I mean, this might not have happened. This happened at a slightly different time, but probably right around the same area. Look at this base breakout. Look at this higher low. Look at this huge monthly low ADX condition. So this didn't have strong ADX. This had a low ADX. And then we started kicking in the ADX here, and you could have played this off the opposing trend trigger on the daily, but then you're using weekly risk because you want to play this. So what you would have done, you would have taken one profit and you would have gone to a break even because it did go to 2 to 1, and you'd be sitting here at a break even on the balance. Okay, and so this would be another. So you now have 2 of these going, and we don't add another one until we get those to a break even. Once you get a stock to a break even, then you can add another. So here's what you're ending up doing: if you risk 1% of equity to your stop in each one of these trades, you're only risking 1% of your account to put on some long-term positions. Okay, and then you could keep doing that. So let's just say, you get this to a break even. Essentially, you take a quarter off. You're at a break even, or again, maybe you cut the risk in half, and overall the trade is pretty close to a break even. Well, now I can add another one, and my risk overall in the account from the beginning is only risking about 1%. Okay, so this is how I would recommend getting long. And we can see, and I'm giving you examples of stocks that have triggered during the bear market. Look at what these things are doing. These were all stocks off my list. Okay, I mean, these were stocks that highlighted. I did on my Wednesday video to clients. I don't really recommend stuff, but I tell them where I think stocks are looking interesting and something we have to watch. So, you'd have been triggered into this somewhere in here, 45, 46 or something like that. Look at this strong ADX in this side, and ADX started to kick in on this time frame after a low ADX period. It gets going, and look at how it's just. What we're trying to find is an independent mover, okay? Independent movers don't really care about the stock market. If you think you're going to buy Apple and it's going to go up with the market going down, you're in for a lot of frustration, okay? Independent mover is a stock like Iridium Communications that no one really knows necessarily. And there's not a high correlation to the stock market. So if the S&P is making lower highs and lower lows, as it has been since the beginning of 2022, this is actually making higher lows and higher highs, right? It's doing the exact opposite. So it doesn't really care what the stock market does. Even during the big rallies, yeah, it might get a pullback here or rally here. I mean, it's not really being affected by that. So what you want to find are these stocks that are showing these huge basing patterns, either have strong ADX on the high time frame or low ADX on the high time frame, and then look for your trigger on the weekly, give it the proper amount of room, put on one trade, risk 1% of your equity. Okay, so if you have a $50,000 account, that means you're going to risk $500 in TWI. All right, you put $500 up. All right, now if you get it to 1-to-1, now you're going to take about $125 profit or something like that. Maybe it's not even that much. And then the balance of the position is going to be cut in half, or maybe even goes to a break even. And there's nothing wrong with doing that. If you get 1-to-1 and you just want to go to a break even, there's nothing wrong with doing that. Now, the worst you can do is make a little bit of money on that first piece. And then you can add another stock. If it meets the criteria you're looking for, then add another one. And then slowly over time, this is the safest way to build up a long-term portfolio, one at a time. You don't have to worry about the market. These are going to be independent movers. If you're looking for those, I would recommend looking for stocks that are have a market cap between 1 billion and 10 billion. I think once you get over 10 billion, it kind of depends. It's probably right now more like 30 billion. Or greater is going to really move with the market. It's hard to avoid the market when you're playing with that big a size, because it's going to participate no matter what happens. But if you can find an independent mover like this, this stock has a market cap of $1 billion. Trades about 500,000 shares a day, and it has a beautiful look to it, right? And I'm not recommending this. I'm using this as an example. I'm just trying to tell you that as you go back and look at the stocks that are breaking out of these big bases, and then giving you pullback entries on a higher low. You've got the pullback trade or the breakout trade in a lot of these setups, and this could have been a breakout trade or a pullback trade as well. And so if you keep looking for those and playing those and then adding them one at a time, you're really not risking a huge amount of your account to get yourself in position for the next bull market. And here's the point. Let's say you let's just say that TWI is a stock you do want to do. You put it on here, and let's say the market gets hit and you get stopped out. Okay, I just lost 1%, or I lost $500 in that account. Not a big deal. My account went from $50,000 to $49,500. I can get back that money. Okay, it's not the end of the world. Now, I've only put one trade on. Now, if the market's really going down, you're not going to have anything triggering to the upside, most likely. So if it's really dropping, okay, so then you wait for a period where the market looks like it's stabilizing and maybe turning around, and then you put one on again. And if you do this, I think your overall risk will be pretty limited if you can do this one at a time and wait for break even or better, and then put another one on. And I think that's a good strategy for building wealth, and you can start doing it right now. All right, go ahead and post any questions or comments, and we'll see you next time.